Hi everybody, Terry Ryder from hotspotting.com.au. This time of the week, every week, we publish our free weekly newsletter called The Week in Real Estate, or The Wire for short. And our number one story this week relates to areas that have relatively high crime figures, and some research that has been conducted by Riskwise Property Research showing results that may surprise some people, although it doesn't surprise us at Hotspotting. And the outcome of that research is that many of the best performing locations, suburbs and precincts on capital growth recently have been areas which have relatively high crime rates, cheaper areas which are generally regarded perhaps as problem areas. And according to the research by Riskwise, many of the locations that they researched in Sydney and Melbourne and elsewhere outperformed the average market over time, particularly those perhaps problem areas that are undergoing some kind of gentrification. Now, for a lot of people, this may appear to be counterintuitive, that you might imagine that if an area is a high crime area or a problem area in a socio-economic sense, that there would be less demand and capital growth would be inferior. But in actual fact, many of these areas do attract very high demand because they tend to be affordable. If they've got affordable housing and good services and amenity and infrastructure, then people will buy there and rent there. And we've found at Hotspotting over the years, when we've researched comparative capital growth rates, that very often the best performers have been those cheaper areas, which include areas that are sometimes regarded as being problem areas. Another story we're carrying in this week's edition of The Week in Real Estate is reporting some of the results from some of the major developers around the country, including A.V. Jennings and Stockman, some of the really big developers reporting very strong profit results, and also their expectations for the major housing markets moving forward. And they're all fairly optimistic, I guess, in terms of where they think housing markets are going to be. They do acknowledge that in cities like Sydney and Melbourne, the price boom is pretty much done, but they expect those markets to remain pretty solid and to have ongoing good demand in those traditional housing markets. They do continue to talk about what they see as a general undersupply, which is why they expect those markets to remain fairly solid. It may well be the voice of vested interest talking up the market that happens in real estate. Developers are certainly a little bit prone to doing that, so time will tell whether their optimism for some of these major markets going forward is borne out. We also have a story from the Housing Industry Association also having a very positive outlook for housing generally for 2018. Again, they're talking in terms of there being generally an undersupply of dwellings in the major markets of Australia, and what they refer to as enormous pent-up demand, as they say, is now being met largely through record supply of new apartments. That may be, again, the voice of vested interest trying to put a glossy image on an emerging oversupply of apartments in some markets. The HIA describes the withdrawal of some investors from the market and the rise of first home buyers off the back of state government incentives in the two biggest states particularly as a defining characteristic of the market this coming year. There's also a story focused on some information from Mortgage Choice talking about the state of the lending market. I think, as most of you are probably aware, the housing finance market has been going through a period of change because of the APRA crackdown, particularly on interest-only loans. So there's been a period of adjustment. What we normally see when APRA has one of its crackdowns is there's a period of adjustment when things are a little bit perhaps harder to get finance, particularly for investors. But then once we've been through that adjustment period, things get back to normal. And the CEO of Mortgage Choice, John Flavel, is suggesting here that things are starting to get back to normal now that the banks have had their period of adjustment to the new dictates from APRA, particularly about the level of interest-only loans, that they're getting back to normal in terms of competing strongly for business from first home buyers and investors in particular. And he notes that the interest rate premiums that banks have been charging for interest-only loans and investor loans have actually come down a bit. The difference between the interest rate they are charging for investors, particularly interest-only loans, compared to home buyers, had the margins between the two had grown considerably to 80 or 90 points, but he says it's now back down to about 40 or 50 points. So that interest rate margin is narrowing as part of the evidence that lenders are now starting to compete more strongly for that kind of business. The Bank of America Merrill Lynch had a story in media this week talking about the supply of apartments coming to the market, suggesting that in a couple of years' time we may actually end up with an undersupply of apartments, because the general theme at the moment is that in some of our major markets there is oversupply or potential oversupply. Brisbane certainly has an oversupply. Melbourne, people basically disagree on whether it's heading into an oversupply period, or whether high population growth in Melbourne will soak up all those apartments. There's certainly a lot of them being built. Perth certainly has an oversupply at the moment. But Bank of America and Merrill Lynch in a report suggesting that because a number of the projects that have been proposed in some of these places have been put on hold or scrapped because of the problem with impending oversupply, that means that a couple of years down the track there's a prospect of undersupply, which it suggests may happen in about 2 years' time. Each week we feature Report of the Week. This week it's the Queensland Hotspots Bundle, where we package up the top 5 Brisbane hotspots report and the top 5 regional Queensland reports into a bundle at an attractive price. So anybody interested in buying the best places anywhere in Queensland, that's the product to get. You can get it from the hotspotting.com.au website. If you go to the homepage, it's featured on the homepage at the moment. We also have a quote of the week, and this one comes from the CEO of Mortgage Choice, John Fable, that I mentioned earlier, and he says, if banks have got their balance sheet capacity and they're within the caps the prudential regulator APRA has put in place, then they're going to be fiercely competing for business. As part of his opinion he expressed this week, that banks are out there competing for business from investors and others more strongly than before, now that they've got that period of adjustment for the latest dictates from APRA put in place. That's it for now. Terry Ryder from hotspotting.com.au. Thanks for listening. Talk to you again soon.